Good morning. It's Monday and we are on the charts. This is Grady on the charts. This is trading entertainment, guys. Hey, there's a lot of risk in the market, so be careful going into this week. Let's start this week off very solid. Let's trade the market defensively and let's go ahead and get started. So, on the news front, there's not really much news going on this week. I don't think we have anything popping off until maybe Thursday, where we have building permits, housing starts, and that's just about it for the week. Mm. I think we have retail sales Wednesday morning at 08:30. So I think that's just about it. So let's go ahead and get started. Hope everybody had a good weekend. Hope everybody had a good weekend. I had a very good weekend. I was able to get a little bit of rest. Able to reflect on last week. Last week was exciting for me. It was also extremely stressful, as I'm sure it was for you as well. So let's try to have a better week this week than we had last week. And we're aiming for consistency, and we're aiming to not replicate our previous behavior, but reproduce our attention to detail and our attention to the strategy. Yeah, it's probably going to take me a little while to kind of get warmed up here to getting into this week. It's just been um, Mondays are very hard for me, and I think they're hard for a lot of traders. There are a lot of traders who never trade Monday because has this sort of a reinitialization phase to it where you have to kind of get yourself back in the groove of everything. And no, you go over your week, you look at the charts on Sunday, you try to see where we're going to open up. And for me, it's always having a bias, having sort of this bias when I come into the market on Monday, where I just believe, oh yeah, as soon as the market opens, I just know exactly what it's going to do. My current bias is this. This is the thing that I'm looking at now. The gap that we left between, and I have a lot of stuff on the chart. Sorry, the gap that we left between yesterday's, last week's close and this week's open. I had a lot of other levels I was looking at in the pre-market as we began to move up through the gaps and imbalances. So this week I'm looking and saying, hey, look, there we are opening here. This is our opening price for this week. This is where we closed. And now I'm looking at this gap to say this is the gap that we left. Are we going to drop down, hit 50% of this level, and then trade higher? Or we're going to drop down through this level, hit the consequent encroachment of the gap, and then move lower? It's all of those sort of things that are playing through my mind right now. And yeah, let's see what we get. Let's see what we get today. I just wanted to mark that gap out just to acknowledge that it was there. I'm going to go to the 15-minute chart. Now, honestly, I should be and still am looking for the first presentation fair value gap. However, I believe price is just failing right here. It seems like we ran above London session high. We took out the London session high. Now we're going to apparently drop back in. Friday's close. Here we are. We're opening here. We drop below this small imbalance. Gonna wick back up into this up level here. Now we had some tariff news that's come out where the president has gone kind of back on what he was saying about tariffs for everything, tariffs everywhere. Now he's kind of created this list of more specific items and things that he wanted to hold off on. Yeah, and it does look like we're going to have like an immediate drop right back into this range. On the higher time frame, we've had a bit of a SMT divergence where the ES was much higher than the Nasdaq. I think the ES is kind of stretched out just a little bit further than the NASDAQ right now as well. Okay, okay, okay. Got formed here on the 5 minute. So on the 1 minute, we have wicks that are in this range over and over and over and over as we're falling down through this range. That last push up gave me the slight impulse to sell. Immediately off the open, I don't like trying to get involved. However, I just have this it's just right there in my face, something that's saying just go short, add the risk on. I missed the opportunity to get short. If it if it begins to move down now, I think it's going to be a very accelerated move to the downside just because of the way that we opened. We immediately ran up just prior to the open, and then we just started to fade. Um, yeah, I do feel, and and again, I listen to myself. I'm saying the word feel, and I need to trade the chart and not how I'm feeling. There's a small imbalance here on the 1 minute. Is there any opportunity for us to come back and address that or no? Mm. We're trading back into the range. Now, my thought is, with everything that we've seen moving into this area before, is that we're going to move down toward the 50% retracement of this range. We're going to interact with it. We may bounce at that level, but then I believe we're going to continue lower from that point. Seeing high prices at this time would be a surprise to me. Um, and I am not um really see that's what you see. You understand what I'm saying now. When we had this area and then it begins to fade to the downside, now we're coming to this gap that was formed in the pre-market. We got to wake up, right? The weekend kind of got us sleepy. Oh, oh, wow. Oh, wow. The weekend has us sleepy. Weekend has us sleepy and doubting what we should be doing right now, huh? That 5 minute chart is showing us exactly what we thought we were going to see transpire here. 9:38 a.m. 1 minute and 41 seconds left in the 5 minute candle. Because it is Monday, I am not opposed to letting price go without me in any direction. I will regret it later. That's just the way I'm wired right now. I will feel bad about it if I see that we have one of these you know uh just just unbelievably aggressive and one directional moves in price that will make me feel a little. I'll judge myself. I'm not gonna lie. I'm gonna judge myself on that. But at the same time, right now, I am. I want to see this. I want to see 19,167 return to. That's what I really would like to see. That's where I would really like to get short. If we return to this level, I would like to get short right there. Because I believe once I mean, as I'm saying this because we're in this massive daily imbalance from that we set up last week. We rallied into it. We broke down from it. We dropped down into the wicks of the prior daily candles. Now we've popped up. in this massive consolidation range. I don't know. So we took out the high, we ran into this level. That could possibly be the breakaway gap. Okay, well, it popped up, but it didn't give me the area that I wanted. I wanted to see that small imbalance. So the reason I set this order up this way, wow, actually I could have put my stop loss way up here. This is a very narrow range. I could have risked that much. That's not a problem. Hmm. Uh, New 5 minute candles just begun. Mm, that first area where price began to sort of sort of slide on the 1 minute just off of the open, right in this area. I really didn't like it, but that was that, and well, I've seen this before, and it normally happens on days where price trends in one direction and it just does not stop. It just begins, right? As soon as the market open, it's where it needs to be, and then it just begins and it just doesn't stop. So I'm concerned about that. I'm not saying that that's what's going to happen today. I'm not saying that that's what's going to happen. That's the thought process, right? It's like that we talked about FOMO last week. That's sort of that FOMO that I'm experiencing at this point. Did I not get this entry and I'm not going to be given another opportunity? That price is just going to continue to run. As we look at the 5 minute chart, these three 5 minute candles aren't overlapping, right? It's not quite a 5 minute fair value gap as much as it's just three candles to the downside with velocity, right? It's moving extremely rapidly in one direction. And so everybody's like said, "Oh yeah, I would love to get short with this, and I'll wait for the quote unquote pullback." And it doesn't seem like there's going to be a pullback, does it? It doesn't seem like there's going to be an area that's going to be a logical point to get in. And if we consider this to be balanced price range, right, straight up and straight down, then what would this be? The breakaway gap, and then what would this be? The measuring gap. And sometimes it's like that, right? Especially if there is no retracement back into the. We couldn't call it a fair value gap. We could possibly call it a market structure shift, where we have this move to the downside. We've just arrived at the 50% retracement of the gap from close on Friday till today. So that's a 50% retracement. We probably shouldn't expect much more than that. Yeah, but that's okay. That is fine. That is okay. Now there's a larger gap just below us where the week opened, and that's the difference between the close on Friday and the close on the open on Sunday. So that would be roughly, it's going to be roughly about here. And that's the 50% range between close on Friday and the, no, no, that's not true. That's not true. That's not true. Okay. I'm seeing it better now. It's a little bit higher than that. It's because the opener on Sunday was here. Sorry. The opener on Sunday was also here. And so Sunday's open and Monday's open seem to be relative equal highs at just about the same area, which I had marked out as a 1 hour fair value gap to the right. I mean, to the off to the left. And then now we have this kind of a rejection at this point. Mm-mm, mm-mm, mm. Yeah, and I am looking for a aggressive movement to the upside, some kind of just a flash to the upside to get us in. Oh, excuse me. Oh. And I think perhaps we would see price not completely close this gap, but maybe just move up, move to about here, just about where my entry is. So what if price hits this area and um, rejects the consequent encroachment and then begins to make an aggressive move to the upside, right? And this is the issue with Monday and why on Mondays I'm very tentative with just taking any trade that I see because it's like I don't want to pull a muscle, right? I don't want to get involved too aggressively, too quickly because I could find myself hurting myself early on in the week and then ruining that process or ruining the week going forward. And I don't really want to do that. I like to start a nice little track record and then you know stumble a little bit, not fall, not really trip, stub my toe as far as price is concerned. I heard people call it paper cuts rather than go ahead and just the full on the full on gouge out. This area right here on the five, it would be great if we could push right into that area, right here, right into this gap. And it'd be like this, this, go above that down close candle. That's a decent amount of risk. 150, $150. Decent amount of risk. And then we'll do 150 times three is something like that. That's like 3 to 1, I think. This is just a slight move back into this imbalance right here. I think I just missed it here. I have a lot of crap in the way. Can pull this back. That was the overall gap. Moved into this tiny imbalance right here. Then we turned over and we moved down. So on the 5 minute, we see these two gaps. I guess I'll call it a gap. This is a balanced price range. That's a breakaway. We opened here. We rose into the imbalance between these two candles here. The high of this candle, which is right here. Then we turned over and we moved down. But there are 2 minutes and 4 seconds left in this 5 minute candle. On the 1 minute, this candle did not close below this candle. We turned over and we just traded up inside of this imbalance. The macro begins in 2 minutes. Okay, now we're at the underside of this up close candle, just to retrace me back to this level. We traded into this gap. Now we repriced this level. Is there anything above this that I think we would use free trade to? Not really. Not really. I think I'm missing some great opportunities, but that's fine. That is fine. After the week that we've had and the type of nonsense that we've seen in the market, I am not really eager to just accept. I'm not really eager to accept just anything that I see on the chart and just jump right into it. All right. So, what did I do today that I I always have to catch myself doing. What did I do today that I have to catch myself doing? And I'll show you what I did. I jumped to the lowest time frame almost immediately, right? And I did do a bit of a pre-market analysis, but as soon as the market opened, I immediately jumped directly to that lower time frame and I started looking at what could possibly be in play. But a lot of the narrative that I have is informed by the way the price has been performing on the higher time frame, where we had this long move up that could possibly serve as a bearish order block. That is at play in the back of my mind. Just below that, there's this imbalance. So we have an up close candle and also a gap. Those two are very powerful indicators of what price might do next. They were unutilized and unused for most of all of last week, but we returned to it on Thursday and Friday, and we kind of just sat here in this area. I say Thursday and Friday, but this was actually Wednesday. This low is Thursday. This is Friday, and then here we are on Monday. But we're still in this 4 hour imbalance. This level and this gap closes above this midline. Then we drop out. Most of the bodies rest where the relative equal highs of these 2 days are. The wicks do the damage. Close higher, then we move higher. Now, will that propel us to higher levels, right? Well, it's very difficult at this point to be sure if this is a clear market structure shift. Is this a clear market structure shift where we see a high, a low, higher high, higher low, and then we continue the process? Or is this too early in the time frame for us to consider fair value gaps that make sense? So sometimes we would have like an inversion fair value gap where it looks as if, oh yeah, price should go into a range and then, take off and go somewhere. Then it rolls over, it does all types of acrobatics, and then it puts us in a different position. At this point, price hasn't really quite moved. I've taken my eyes off of the lower time frame, and now we are on the 5 minute chart making what looks like a move on a 5 minute chart. So this is the higher time frame analysis that I was looking at. So the thing that I wanted to really draw my own attention to, because this is going to be pivotal, and again, like I said, I might miss this trade doing this, is here is the high of the 4 hour. Here is the low of the 4 hour candle. We're on the 2 hour chart. That's this area here. We're closing below. We on this candle, we close below this up close candle. We've shown respect to it. We only have wicks in this area and no up close candles, and the current candle is moving down. Going to drop to the 1 hour. The prior 1 hour candle high is here. We ran up above that at the beginning of the day. This is the 4 hour candle high here. Going to make that thicker. And then this is the current 1 hour low here. And then, of course, oh, I can see what I'm doing. So I am attempting not to, like, again, like I said, attempting not to just go all in and say, oh yeah, 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 right. We ran up above the high this hour, we respected it, now we're dumping. Because even on this hourly time frame, we see that we close here, open, close, 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 close. Well, as we move down below that level, close up, took out the highs above this level, inside of this range, open, and we dropped all the way back down into the wicks of these down close candles. Now we have 5 minutes and 49 seconds, and now we're moving back up this range on the hour. On the 30 minute, it's exactly the same story. On the 15 minute, though, now we see what looks like a 15 minute fair value gap to the downside. This close is roughly below the prior close. We're at or near the what do you call that? The opening price of the prior hour. And now we're moving back up into the range. That's the 15. We'll go down to the 10, and this could serve us as a 10-minute fair value gap, and that's that imbalance that I was hoping to see us trade into. It was here. Oh, eight, nine. It's 9:55. Something is wrong here. Okay, I am in for one contract right here. I have one more above this level. I'm looking at the 10-minute chart. A lot of lines and a lot of levels. Just watching to see whether or not we go down below this hourly level and get down below that hourly level in the next 5 minutes or so. Or do we come up here, trigger in my next entry, and then I have both of my stop losses here. 2 times 168 comes out to 300 and what, 26, something like that. No, 336, I think is the proper number. Reduce that risk. I think the risk is about $180 at this point. That's fine. 956. But if we're in an hourly consolidation, then we won't be going much further than this. I just looked off to my right. I was looking at this hourly chart, thinking to myself, we if in the next 2 minutes we close below this hour, close below the prior hour, that would be wonderful, right? That would be nice displacement, have nice displacement properties where we could probably go to the downside. This cell, I want to maybe move this cell in just to about here and then reduce the risk on both of these stops to about $200. 2 minutes left in the hour. Now, while I'm doing this, I know I'm in a trade in this trade right now. I want to take a look and see if there's something that I did not evaluate properly before I really I mean I don't have a lot of risk on, so it's not as if yeah, I don't have a lot of risk on, but I just wanted to kind of just reassess what I was looking at. Because my thought is what was the thought again? The thought that I have and the conviction that I was holding was that we were going to move below the 50% retracement level and then continue lower. That we're going to go down through this level and move lower. We kind of didn't though, did we? Coming back to our entry, we might pick up this second order, which is going to make our risk for the day right at $200. And 1 minute and 15 seconds left in the hour. 41 seconds left in the 5 minute candle. 31. I'm going to remove this second order. It's going to it's going to reduce our risk overall. However, I also think that if we were to change directions on this candle, um, aggressively, okay, now we close lower. This hourly candle closed lower than the prior one. This is above the 50% level of the prior up close candle. It's kind of above the 50% level of the prior up close candle. I need to measure that better to see if I'm telling myself something that's not. And sometimes that's possible. This is the consequent across the mean threshold of the prior up close candle. We're just above that. I did want to give myself an opportunity to add as price came back up through these up close candles. However, if I don't get that entry, that's okay. I would just like to see price begin to deliver at this point, and then we'll manage what we have on and be just thankful and grateful for that. I'm going to take this off, and I am removing the secondary buy stop. I'm just going to sit with what I have. I don't see my stop loss out here though. That's the only thing I don't like. I don't know where it went. Did I accidentally click my stop loss? That would be funny, wouldn't it? That would be so hilarious. So I'm gonna put a buy stop out here because I can't see my stop loss. I thought I had a stop and a whole little system going on here, but nothing. Must have accidentally clicked it. Yeah, gotta be careful. Now remember, I'm literally trading against the main idea, which is we traded the 50%. We traded to the 50% gap that we left open on Friday. But the idea that the hourly candle closed below the prior hour has me considering a bearish position. Okay, and the 50% level of the prior hour is here. Now my stop loss is below it. Now if I move that stop loss one more time, it would just be to give it correct positioning and nothing else. That looks bullish, doesn't it? Yep. I think it's gonna go ahead and stop me out. But I made some clerical errors today by moving the initial stop loss, which actually gave me an accurate account of my risks that I had on. If we move above this level, if we move above the 50% level, then I'm like, yeah, we're definitely bullish. But my stop is actually too low. It should be at least above the 50% of the prior up close candle, if not up near the high of this down close candle up here somewhere. So my stop loss is extremely tight for no reason at all. Boom. Let's see if we get bullish here. Remember, we just left the 50% retracement of the new week opening gap. And it's a powerful PD array that can send us much, much higher. So on the 5 minute chart, let's go ahead and zoom back out. On the 5 minute chart, here's where we are. Mm, 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 mm. 6 seconds left in the 5 minute candle. It's 10 a.m. At 10 a.m., this is where we are in this gap at that level. Well, Grady, do you think you're going to get short here? What I'm going to do is I'm going to watch the 1 minute candle for just a small amount. And now we're coming into a 70% retracement of the range. Price went above London session and then just below London session. So we took out the high and the low. Now we return to this 70% retracement of the entire range. I wish I had a way to create that stop loss up there. If we continue higher from this point, overall for the market, I would be happy, right, that we would have a rally because for a lot of people that would be a lot of relief. Um, for my individual trade right here, I would be more happy that it went my direction. Where my stop loss is, I really want to consider that as a balanced price range. If it doesn't meet the criteria, it means I need to study that just a little bit more so I can understand what the criteria is. It's 10 a.m. Because we're at 10 a.m. and we moved to this particular location at this particular time. I put on the short, and it's Monday, so I don't have very high expectations for today's trades to play out um, easily. And the reason for that is it's just rust. It's just rust of the weekend. Just not sitting in front of the charts, going over live price action, for hours after hour after hour after hour. I think that's for me, that's one of the reasons why some of my best trades unfortunately happen on Friday. Sometimes because the week shows, the um reveals what your current habits are. Monday, Tuesday, Wednesday, you're like, oh yes, Monday, Tuesday, I did this. Wednesday and Thursday, I did this. Friday, and by the time you get to Friday, then you're trading at probably your best and your highest level because of the daily consistent time that you've been sitting in the market. For me, coming in on Monday, it's like, sort of stiffness, sort of just this, mental fog, I guess you would say, that I have to kind of deal with coming into Mondays that I don't have to deal with on a Friday. But one thing I don't like, and this is, I think, my main point was one thing that I don't like about that is the because you had such a great day on Friday, you'll come back in Monday, then you're looking at Monday saying, "Hey, Monday, you like Friday?" But then what you're really saying is, "Hey, trader, get warmed up, get warm, get back into the groove, understand, the difference between X, Y, and Z." 5 minutes to the close of this 15-minute candle. There's a new 5 minute candle just opened. What I really want to see is the relationship between this candle and this down close candle right here. This is the relationship I would like to see. Are we going to, you know, interact with each other, or will it be, hey, how are you? Priced, you priced in. We traded this all pre-market. I'm gonna get past you, and we're gonna get down to the next range, to the next level. Okay. Now this imbalance on the 1 minute chart was formed where it was formed. So this is 10 a.m. Literally at 10 a.m. This price was moving past this level to get to this gap. That's why I want to watch this level more carefully than I was watching this level. Yeah, we delivered right back to this zone. This could be the silver bullet for today. This could be today's silver bullet. And we just watch price deliver right back, right past this imbalance into this gap, deliver to the downside. So what am I concerned about here? Boom, boom. I'm concerned about this prior imbalance, whether or not we decide to run it or whether or not we decide to stay below the middle of this range. Mm. Now, I probably should leave my stop loss in place, but again, I like to, I'm a stop choker. Sometimes I will smother a trade. I'll just get in there and I'll see the range and I'll pull my stop loss right to the prior wick. Like, I don't know. So, let your trade breathe, bro. Let it breathe. It's early in the day. It's Monday. Let it be easy. Just let it be easy. Just let it be easy. Right? Don't make it hard. It's already difficult enough. There's so many things to do. Don't make it hard. You see what I'm doing? Bad habit. This bad habit. Bad habit. Leave the stop alone. Leave it alone. Let it do its job and do your job. Boom, 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 bang, 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 boom, 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 doo, 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 doo. So really what I would like to see is low resistance liquidity right now. Low resistance. You showed us the big show last week. We went forward, we went back, we went back, we went forward, we went up, we went down. Let's show us low resistance at this point. Go ahead, get down below these ranges, and then go ahead and show us what we got going on. Now we can reprice to that 50% level once again, meaning we could just come right back into this level, retouch the 50%, and then get higher. But this, but this, but this is unexpected. Grady, are you going to go ahead and take your $130 and move to the sidelines very quickly? I am thinking of it. I am thinking of it. Why? Why? What are you nervous about? It's just that I'm just watching price drop down into the body of these candles, do this and do that. Are you going to choke the trade? Or are you going to take a small loss? Or what are you going to do? Mm, man, I don't want to bail on this trade. I really want to hold it. To me, it would be not the most not it's not the most obvious trade. It's really not the most obvious trade. I think the trade off of the 50% retracement of that gap was the more solid trade. Even now that we had that and now we've had this gap, it makes more sense. The only thing is I'm gonna peek at ES real fast. We have 41 seconds left in the 5 minute candle on the ES, and the ES 5 minute candle is really low in the range. And I am wanting and watching to see us close lower here in the next 26 seconds. So let's see the ES move to the downside on the 5 minute level. It's vacillating. 10 seconds left in the 5 minute candle. This is going to tell the whole story. 8, 7, 6, 5, 2, 1. Ugh, talk about a what? Like a what? It closes right on the opening price of the prior down close candle. That I really wanted to see us a little bit lower than that. That would have been much more a desirable outcome than what I saw. The next candle rises higher, then we turn over, we drop back into this down close candle right here, and that has me thinking it is time to pack my bags and go. But no, but no. Let's see. Let's watch and see. Whew. On the 15-minute chart, we just hit the opening price of the prior down close 15-minute candle, and that looks like this. So just monitoring these areas for rejection. Looking here, that is the opening price of the prior 15-minute down close candle. Just want to get down, bump, bump, time, keep on slipping, slipping into the future. Time, keep on slipping into the future. Sometimes, let me see. Sometimes, the last time was looked at a nice little delivery on a trade. I compare it to what I see on social media, and I shouldn't. Comparison is definitely the thief of joy. However, do not watch an accelerated delivery of price and then compare it to your delivery of price. You'll say, "Oh wow, they entered a trade, and in this YouTube short, they made uh $14,000 in 60 seconds." Don't do that. Don't do that. Sometimes those trades where you're sitting there watching the man hit go back and forth so quickly, they take an hour and a half. In some markets, they take may take multiple hours to deliver as price moves back and forth and trend in one direction. So, it's that's very it's not intentionally deceptive, but it is very deceptive to think that that's how price would play out. On the hour chart, we are at the prior hourly candle close on the hour here. Now we're below that level, and we are forming the body of this current price action of this current hour. So that's what we got going on. Hmm. Hey, if you guys are here live, or if you drop into the recording of this live stream, please hit the like button. Please subscribe. We appreciate your participation in this trading entertainment. Hopefully, you can get something out of this that you will find enjoyable, or if at the very least enjoyable, and some of it maybe even eye-opening or educational, not in creating price action, but in the thought process that goes on with the trader as they watch price deliver. Here's the low of the prior 1 hour candle. Watching that level as well. I know I have this red line marked out in a weird spot because it seemed to have moved. But that was the low of this level. And this is where I want to see price seriously reject the low of the prior hour. The closing price of the prior hour is where I wanted to see price really reject. So I think we came into just a decent amount of profit, but we're right back in the same levels that we were prior to our entry. And the first thing that I'm thinking now as I see price move back into this range is what? Protective stop. To move my stop into a place that protects us from any additional loss today. It'll give us a chance to reposition ourselves. We could get back involved at some later time. We don't have to really we don't have to force profit, right? Profit. You're gonna profit. No, we don't have to force profit. We can be patient. and we can hold on to what we have little by little. Let's move this into a protective stop, and we'll just sit and see what happens. Because, we don't have to deliver on my timetable. And I think that's the real statement that I wanted to make is that we don't have to deliver on my timetable. What I just need to do is manage that risk right now and make sure that when I am able to get into a trade that's delivering more freely and is more one directional with low resistance, then I have, as they say, I have dry powder. So I won't be in extreme drawdown. And then once it really starts to deliver, then there we are, right? We're in position and we're on side. We return to an area just above the 50% retracement of that new week opening gap or new week gap. Two different things, right? So there's a gap in the week and there's a gap between Friday and today's opening price. So the gap between Friday's closing price and today's opening price, we are just above it. So we were there at 9:45 a.m., right? That was that 50% retracement. Then well, actually, I think, yeah, right here. Yeah, we were right here. Then we flipped over and popped right back up. Jada, 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 jada. Actually, here's the 50% retracement here. No, here it is again. Here it is, here it is, here it is. It's going back and forth. And one of the things that I find interesting is that this is kind of locking me into a particular position. So that's why you take your time when you get ready to enter a trade. Because this kind of locked us into a position. This level, this line is that zone. So we were just above that 50% retracement. I wasn't really far off. However, I'm looking at this imbalance that is this white line, and that white line represents a higher time frame low. I should have marked it out again, and I will this time, just so that I, this is a 4 hour close. So now we're above that prior 4 hour close. And in the 4 hour chart, we've struggled to get below these down close candles, right? And this is the issue that we're kind of dealing with. That we opened here and we dropped. Now we put a wick up and another long wick up and another long wick up and another long wick up. What I would prefer it be is just a mohawk into some higher time frame up close wicks. And we're just sourcing the bearish order block on the higher time frame by sending wicks into that direction. Are we done doing that? I don't know, man. I don't know. I can't really tell you. I know that we are just bouncing back and forth at the closing price of this prior up close candle. On the 2 hour level, that opening price is the low of this 2 hour candle. So now we're touching that level again and we're retesting that level again. And that level, is it offering us resistance? Is it the resistance area? Now, because it's such a higher time frame candle, then we can expect rapid response and rapid delivery. Inside of that 2 hour candle, there are many other candles that need to be addressed, right? You have your hourlies, you have your 15s, you have your 10s, your 5s, and even your 1 minute candles. Inside of that candle, the price has to address prior to delivery to the downside. Oh boy. This candle came very near to the closing price of this 1 hour candle. Okay. That was good enough for me. I don't know about you guys. I was very happy that we went up to those levels. Now, what I would like to see happen is something very much lower time frame than that or lower level than that. Perhaps the low of this candle could offer us, look at this lag. Wow. Could offer us something, you know, more agreeable. That would be the low of this up close candle. The opening price of this up, call it the low, and I mean opening price. The opening price of this up close candle could offer some resistance. And yes, I am rooting for my trade right now. I am rooting for my trade because I don't mind the back and forth price action if it's following the narrative that I'm vocalizing right now, right? If it's following that narrative, then yes, I am rooting for my trade. If I hit the resistance at that level, reject. Hit resistance at this level, reject. Do those things as long as we are continuing to follow that thing. Now, what 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 am I not seeing? Right? What am I not seeing? And that's the important thing, right? What am I missing? Have I zoned in? Have I zoomed in? Have I gotten tunnel vision? And later on, I'll say, oh, yeah, look how this candle and this candle have this relationship. Or look how the low of this candle and the high of this candle have this particular relationship, right? What's on the bullish side that I'm not seeing? That's and unfortunately, I want to say greater than the lower time frame. But if it's creeping up on the lower time frame, I won't see it until we go up above this candle and break that market structure, right? It'll be then. But I have my protective stop in place, and we're floating just a little bit of something on the P&L. And let's see what time it is. It is 10:26 a.m., just before 10:30. Then we have this small time frame imbalance right at the intersection of the prior closes and opens on the higher time frame candles. It's right in alignment with those levels. So that's why we have these lines that represent the opening price of the prior up close candle on the hour right here, this red line. And that red line runs right through this imbalance. We drop down below that opening price, we rose above that opening price, and then we touch that opening price here. And it seems that we've had a little bit of reaction. I would rather have had reaction with the opening price of I'd rather not have had reaction with the opening price or the closing price of this candle, which I think I may have lost sight of, that we ran, created the wick of this candle, dropped in, dropped down below, close of this candle, and then had this reaction at the close of the prior candle, and then we moved back up. Okay, I'm gonna move my stop loss into place. My stop loss does not need to be moved. It's just that we're coming back in, and it's kind of a chip out of the old P&L here. Doesn't that suck? It does. But we're coming back into a 62% retracement of the total range from the high to the low. And I really feel like I should risk a little drawdown in order to stay in this trade because it seems that we could possibly still truly be in position. And once my stop loss was run here, we would still be below 60% of the total range on the 15-minute chart from high to low. There's a possibility that I'm just too tight again. So from this high to this low, this level is literally 70% retracement. And now 62% retracement is right here, right where my stop loss is. But what can I do about that? Really, right? Can't stand to be teased like this though. Oh, I can't stand to be teased like this. Sometimes you're in a trade and it does this thing, right? It gets close to hitting close to a particular level, close to a particular area, and then just prior to it, it does this slight little pullback, as if, right? Like, oh no, I was just running the wick of this 5 minute candle. I wasn't really coming all the way back up there. And you're like, really? And it's like, no. Like, no, I'm here for your money, buddy. No, I'm here for the money. That's funny. Let's see what happens here. If let's see if we're gonna respect this 5 minute candle and we've just run to the opening price, placing a wick inside of the wick of the prior up close candle. Let's see if that's what we're doing here. I mean, because I would not mind just snapping the $80 real quick. It's not a thing, right? It's not like, hey, let's see. Are we respecting the prior up close candle? Is that what we're doing? Is that what we're doing? We're going to respect the prior up close candle on the 5 minute chart. We just came back here to price in some activity. Is that what we're doing? 1031. Come on. Are you respecting that wick? Are you just respecting the wick? There's a long time left in this 5 minute candle. There's a lot of time left in this 5 minute candle. And I think it's saying to me, no, dude, obviously not. No, bro, obviously not. What do you think this is? Free Cash Friday? That's probably copyrighted. I've heard of Free Fall Fridays. This is the high of the prior 5 minute candle. I do want to see that respected. That's something that we want to see. A straight to acknowledge, respect, and we also want to just say goodbye to it. Right? Get down below it, say goodbye to it. Mm, 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 mm. Very interesting. That is very interesting. Higher time frame price section, man. It has the larger the degree of delivery, but the longest gestation period. Like if it were an egg, right? You have to sit on this egg much, much longer than any other bird. I didn't like that. I did not like that. See, we're still here in this up close wick. We're still attempting to respect it, but it doesn't seem like we will. It seems like that we're going to go ahead and bounce off of the 50% of that gap and then move higher, or at least take out the prior high and then get lower, right? Yep, stop me out because I moved my stop loss literally into traffic. Yeah, I was literally into traffic. Now let's see what happens here. 10:30, we hit my stop loss and do what? Plummet? Because y'all don't think I'll just bust down crying out here on this internet, do you? You don't believe I will. But oh, why? Because you see how I just went right there and just got my stop loss right above that level because I put my stop loss in traffic. Uh-uh, uh-uh, uh-uh. And I did it just to draw just a little bit to avoid just a little bit of drawdown. Come on, Jimmy. And as we can see, in either direction, it really hasn't gone any particular way. So it's not as if to say, you know, here we go. 3, to one, close of the 5 minute candle. What are we doing? We still respected the wick of the 5 minute, right? Of this 5 minute candle wick. We still respected it. We ran up here. We got down. We closed below the closing price of the current 5 minute candle. Mm, 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 I don't know. I don't know. I think I was saying, for a second there, I was like thinking I was singing the Addams Family or something, but I'm not sure. La 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 la. Monday, right? Exactly. Monday. I've seen several times when price uh, reacts to a 50% retracement, and normally it's it starts to deliver before 10:30. Yeah, it starts to deliver before 10:30. In this particular case, it has decided to trade till noon. And then at noon, price says, "Oh, okay, let's free up. We've done all of our weekend calculations. We've priced this in, we priced that in. We've priced in the weekend, we've done this and we've done that." Mm, carry price action. Can't stand it. Hey, hey, hey. What's going on? I think I just had my stop loss too tight. I think I took that short here and then I put my re-entry model somewhere around there, right? I had the two orders that I wanted to get involved with right here. I was like, look, oh wow, that's going to deliver. Entry from here to there would have been very nice to start the week with. And then I would have cut this stream short. Hey, 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 what are we thinking? What are we thinking? Watch this. 1 minute left in this 5 minute candle. I'm just going to begin to remove many of the areas and levels that I marked on the chart. And I'm just going to start removing them all so that I can see just a little clearer what I'm dealing with. What I think I inadvertently did was remove my London session, which is right here. 7, 5:15, 5, 2. There's the high, and there is the low of London. I'll block it. London session. Just want to make sure I can clearly see what we're dealing with. Because we ran above London session, then we dropped down below London session, creating this sort of imbalance. Then we went here, we pressed up, close high, way up. So I took my first short in this range. Wow. Wow, 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 wow. We rejected this level again, again, again. How much time do we have left in the hour? We have how much time do we have left in the hour? 20 minutes left in the hour, okay? 5 minutes. I mean, yeah, we just started another 5 minute candle. With 20 minutes left in this hour. Let's see what we get here. On the 5 minute chart, the low of that tail of the prior of this candle just dropped down to the body of that prior 5 minute candle. Looking here. I just want to see what the outcome of this reaction is. Oh, oh, oh. It's a little chilly in here today. Mm. Mm-hmm. Jingle bells, jingle all the way. On the 5 minute chart, just this move up and roll over prior to this little small push down. This has me curious as to whether or not we're going to interact with that at all, or whether or not we just move to this level and then leave it alone and then move back down. Oh man, I wish you know what I just don't. I just need a. Ah! I'm looking at this chart and I keep singing this song. You're gonna taste my venom. Venom, Venom. 'Cause that's what that because ever since I saw that Venom thing, I'm like, oh yeah, right. The little move over right there, and then he says something about an injection into this area, and then delivered to the downside. I'm not saying that this is Venom. I'm not saying that. I'm not saying. I'm saying that that's what I keep projecting to myself in my own mind is what I'm saying. Oh boy, I'm watching the 1 minute chart just drop down. We have relative equal highs. What are we thinking? 11 a.m. 11 a.m. is going to take out the relative equal highs, and then what? You tell me. You tell me. Mm-hmm. And as soon as this stream is over with, I'm gonna go look up the Venom criteria. It's just for dramatic effect, I think. So don't worry too much about where I put my stop loss. It's just for dramatic effect. Uh, for dramatic effect, I'm just gonna drop this down here. Need to move it off of that down close candle. Mm. 20, that's like 20 to 1, 20, a 20 yard trade. And I think really the only thing that I'm looking for is a test of that 15-minute high and then delivery to the downside. Where's mean threshold on this up close candle? I changed my bearish order block um measurement because it was too aggressive, right? It was just too aggressive. It was too aggressive. And so I just kind of sent it back. I just kind of made it visible so that I know where I'm looking for my bearish order block, and that's that. This is not quite what I expected, like because I thought it was going to be some sort of like a flash to the upside, but it's kind of like since you had the nerve since you had the nerve to put on a trade right here, I'm not going that far. As a matter of fact, I'm tired. I'm going home. I wonder if we could reach that 15-minute high. If that's, I mean, 15-minute closing price. If we're going to come into close proximity to that, running above these relative equal highs on the 5-minute candle. But Grady, the gap, we just hit the gap. Don't you believe that we're going to move up from this point? It's possible. I just think that the volatility in the market and the way that everything is playing out isn't causing a lot of strength. It's caused, it's just almost as if your immune system is compromised and then it's assaulted by some even common, elements. You could just have a bout of weakness for a while. And every time you feel a little bit better, you might just feel a little bit worse, you know, until you can finally get back on your feet and feel stronger, but not before then, you know. We can tell, and we can tell, and we can tell by the lackluster performance of price action and price range that there's not a lot of get up and go get them in the market right now. And my only sensation of get up and go get them is, I mean, get up and go hit my entry. Get up and go get me into this trade. Patience, 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 patience. Not being in a trade is a part of trading. I'm not in a trade right now. I could possibly be in one in just a moment. Um, yeah, and the risk is decently low. We've been in the market roughly just a little bit more than an hour. The current hour is coming to an end in 10 minutes. I have this entry out before the macro begins, which is ill-advised. Now that I think about it, I don't really feel like doing backflips, right? Because of it. But my stop loss is above the perspective perspective, not confirmed, but perspective, uh, bearish order block on the 15-minute chart, giving it reasonable range. Mm-mm. Pop, psst, pop, 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 pop. All right, so now we just kind of slid above those relative equal highs just a little bit. hmm My entry is just below the main threshold of this five of the on the 15-minute candle. On the five, I am seeing something very strange. I don't know why it looks like this. Visually, it should be sent to the back, and I should be able to see that. Hmm. I'm trading the micro, and I'm also looking at the E-mini, and I see that there's just a bit of discrepancy in price, just a tad bit of discrepancy. On the E-mini, we've just reached mean threshold of that candle. Oh no, we did. We at mean threshold of a prior candle, a prior up close candle to the left. That's what I'm talking. That's what I'm looking at. Okay. All right. Okay. 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 All right. All right. Chill. All right. There was a little bit of incongruence on my part, but we just swept these two highs. And of course, my concern is what? My stop loss is just out of range. Um, it's not gonna come. It's not gonna get my. It's gonna not gonna hit my entry. I'm gonna be right and wrong, and that's not gonna feel good. 1052. I'm looking for just a slight impulse to the upside, just a flash of movement to the upside, and then a correction to the downside. Hmm. Mm-mm, mm-mm, mm. So I really haven't decided on which book to read next. I am still. I'm in the last hour or two of First Rate Madness, and I literally have 1 hour left in this book. So now I have to decide what I'm going to read next. This has been a very eye-opening book about how successful or some of the greatest names in history were just were not perfect, I guess you would say, to any real degree. That they had idiosyncrasies and they had characteristics that were varied and altered by by life and by all types of issues that they struggled with. So it's a very interesting book that shines a light on. Let's see what happens here. That shines a light on us all. I think that's a best way to say it. It just shines a light on all of us. Now, I really, you know what? I'm putting on a personal poll because I'm watching this myself. A personal poll is this: do I think that we're gonna grind in one direction for the rest of the day? Is that a possibility? We're in the low end of this fit of the 15-minute candle that forms the high of this range. It's not gonna give me those last few ticks that I wanted. And I'm saying that out loud. And I know that's like, hey, but yeah, but the machine isn't listening to me, right? The machine is doing its own thing. It's right. The computer is so the market is doing its own thing. It's not listening to me. So if I can say it out loud, that it's gonna come very close to getting me into the trade of the week brought to you by Grady's on the charts. The trade of the week is right here. And I don't want to fumble my way into it clumsily. Oh no! Trade of the week. 10:56. He doesn't want to fumble his way into it clumsily. What are you gonna do, buddy? What are you going to do? I definitely wanted to limit into this trade. I did not want to market in. I wanted to limit in because that was the price. The quality and the particular price that I actually wanted to get involved with. And when I limit in, I have much better outcomes than when I market in. Marketing, the idea of being able to market into a trade, to me, makes it feel like gambling. And because you're looking at the time, you're looking at the movement of the tick, and you're trying to right click in at the right time, which is the gamble, right? Is this the right time or not? Putting my entry just above these relative equal highs did not seem to be it didn't seem to be a great idea. It seemed like it was too narrow of in my vision of the entry, it was too narrow. And I did, and I did that, I did. And it just seemed like my vision of the entry was just too narrow. Just a slight run above the relative equal height. I'm thinking, no, there's area above that. I want to see us push. Now, who's screaming? But that's a balanced price range. You know it's a balanced price range. Yeah, I know that too. But yeah, give me something, right? Yeah. So do we think that's it, right? Do we think that's it for this consolidation, right? Do we think that's it for the consolidation? Or do we think that there's going to be much more of this back and forth for us to endure before price finally decides to say, hey, let's go somewhere else? On the 1 minute, we've moved below the down close candle here. Now it looks like we are going to 1 minute and 13 seconds left in the hour. What does the hourly chart look like? Come on. We just ran the high of the hour at that point and then turned over. We went into the wick. We respected the wick. Oh man. No, I'm gonna get out of here. I'm gonna get out of this trade. Get out of this trade. What do I want to see now? I want to see the next hourly candle open, and I want to see where we press to in the next hour. 34 seconds left in this hour. I'd like to see where the next hour puts us. That would have triggered me into this trade. I would have been triggered in here, but we would have a closing price here, and then the next candle can open and it can put a wick up here somewhere. This is where my original short entry was. Create an order. My original short entry was my stop loss was up here, and then again my TP was on another planet. That's fine. Let's give it a little room to breathe. New hours just opened, and we put on the same trade again. Now, what are we looking for? We're looking for, come on, Grady. Dude, I'm looking at this and I'm saying to myself, hey, mark it in, put your stop loss above the high of this down close candle, and then call it a day. And because now we've had this hourly candle close here. We'll look at the hour. This is where this hourly candle closed. So we had this candle close lower. This candle came up above the high of the prior up close candle. This candle opened and the high of it is right here. What, right, what do we have to lose here? What are we thinking we're going to see? We're going to see this candle drop down into the body of this candle, then rise. Let's watch. Yeah, that's it right there. I wanted to limit in, but I might just have to mark it in today because my because 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 I don't have lower time frame wicks to deal with. I have higher time frame bodies, right? The high of the prior 15-minute candle is here. We just tapped that. There's some other stuff up here. Should I just deal with the drawdown that's associated with it? I still have questions right now, and I am in the middle of this current range. Later on, this might be the high end of the total range, but right now it seems like I'm in the middle of this range to the upside. It's 11 a.m. Price is respecting lower time frame up close candles. I'm yeah. This is kind of all I left myself an option to do. We just swept these higher up close candles. We're respecting this level on the 15. We popped up here. We closed lower. We ran up. So if it could be two down close 15-minute candles on the 30-minute chart that just, you know, they just pull back for a minute and then they run higher. We've seen this before, right? This is the wicks. This is the candle forming wicks and tails, the hourly candle forming wicks and tails. We've seen this, right? So price opens at let's see where we are. Price opens here at 11 a.m. Okay, we open here at 11 a.m. 11, 11, 11. Then we move up to this imbalance and then we drop down a little bit. Are we going to consolidate all morning? Are we going to go to the upside? Right. So right now it seems that it's giving us all types of consolidation signals, and we've kept our risk low, and we've taken our time getting involved. Um, but we could just do this. We could just do this for the rest of the day, right? Maybe till after lunch, maybe around 2 o'clock. Then the price will begin to expand, and then we will break out of this situation and go one way or another. Still early on, but what I see right now is positive. I'm fighting the urge to hit sell, sell, sell right now. Fighting the urge to hit sell, sell, sell. After the consolidation and price finally says, "Hey, let's get out of here." Remember, this is that similar price action that we saw at the very beginning of the day here, where it was, it was just sliding, wicks and sliding, wicks and sliding. Hmm. Yup. Yabba dabba doo. Oh man. Guys, this is trading entertainment. I want you guys to know that anybody who decides to get involved with trading the markets or getting involved at their own risk, um, it's highly profitable, but at the same time, you're subject to lose sometimes more than you would gain without proper training, risk management. So get involved at your own risk. Get like again, I have to say this, it's as they say, it was all on you for the decisions that you make and for pressing the button or not pressing the button. So yeah, take your time. Take your time with this stuff and enjoy the learning experience as much as, anything else. Enjoy learning about yourself, learning how patient you could be or how focused you could be. Now, remember, I'm still thinking consolidation. I'm still thinking consolidation. That is still the thought process that I'm having right now is that we're going to consolidate. We are sitting in consolidation. We are consolidating. So I'm not thinking anything else at this point besides greed saying, I told you hit that sell button 5 times, right? 5 times you'd already be at $580, buddy. You already be, I'm like, okay, calm down, Jimmy. Calm down. Calm down, man. We gotta get below these lows and make some solid closes down here before we really start thinking anything besides, oh yeah, it's just a pullback to reconfirm some confirmation, right? Because look, where are our wicks? Look where our wick is. Look where the body is. So we've come into the closing prices of the down close candles. But are we blowing past that? Are we running past that? No. We're doing exactly the same thing in the low as we are looking for here. Are we respecting the closing prices of the up close candle? Yes, we did. Are we respecting the closing prices of the down close candles? Apparently, we still are. So that's consolidate, which that's still consolidation activity. Consolidation, I wanted to say language, but I meant what I say is that is still consolidation price action. Is that we're just going to go to the closing price or the opening price, or we're going to make a 70% retracement here, a 50% retracement there. We're going to go forward, we're going to go back, we're going to go forward, we're going to go back. We have 1 minute left in this 5 minute candle, and we've traded up and down this range. We've traded up and down this range. Consolidation doesn't care about what I just said. It doesn't care about how I feel about it. It doesn't care about how frustrated I might be that we're still just bouncing back and forth between the high and the low and the high and the low. And every time we take an entry, this is why we cut Friday short. Remember? We cut Friday short because it was giving us wicks all the way in one direction and then wicks all the way back in the other direction. Wicks all the way in one direction, wicks all the way back in another direction. And then finally, with one or two candles on the higher time frames, it said, let's move to another area to consolidate. And then it just displaces to the next area and then back and forth. And that's where we are right now. And this is what I'm referring to when I say that. I'm just referring to this on Friday, right? It doesn't look like it, but early on, Friday, early on, it was just back and forth and back and forth and back and forth. And it wasn't until about 11, and then it started to move away from that zone. So now Today is our 11. Makes that sure that makes sense. Today is 11 o'clock now, and we are still consolidation pattern. Now that we've respected the, now that we respected this, and we're back into this range, then we're saying what? Well, 5 minute candle. Hey, hey, buddy, you had your chance to run the lows out. What are we gonna do? Thinking to myself, how much drawdown do I want to see on this right here, if any? Like, right? How much drawdown, if any? On the 1 minute, pop up and we move, keep going. This is clearly a moment that we are all looking for. If anybody out there is in this trade besides me, this is clearly one of those moments that we're looking for just to see price just say, "Oh, excuse me, opening price at a down close up close candle. I need to get past you. Oh, excuse me, closing price at a down close candle. I'm trying to get down lower." Mm-hmm. Mm-hmm. 11, 12. Mm-hmm. 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 2 minutes and 20 seconds left in the 5 minute candle. We're still poking at the close of the prior 1 hour candle. We just keep poking at that level, poking at that level. And we've gone back and forth between the close of the last two. There's a I don't have to talk about it. I can show you. This candle and this candle. We poked at the closing price of this candle, and we keep poking at the closing price of this candle. So those 2 hours, we just keep poking at the closing price. This closing price of that closing price. This closing price of that closing price. This closing price of that closing price. Hey, closing price of that closing price. Hey, closing price of that closing price. Hey, closing price, that closing price. Hey. And every time we come down into the range, we double clutch. What? Forward or back? Wait, what? Wait, forward or back? Wait, what? Wait, forward or back? That's decent. That's decent. I'm glad I didn't over leverage. Over leveraging would not have helped us here. It would have intensified that level of angst. Come on. It's interesting how price is being held in this range. It is interesting how price is being held here. Do you think this is giving institutions enough time to get on board, to get on side with this, or no? All right. Do you think the big money players have enough time to, move all of their chickens into position, or no? We got five, four, three, two on this 5 minute candle. New 5 minute, and we're way down here. That's encouraging. Hey, hey, that's encouraging. Did we close out the 15 minute candle down here too? Oh, we did. Ooh, ooh, that looks really good. That looks really encouraging. Okay, okay, I think I can hold for another few minutes. That looks very encouraging. Now, break the range. Break the range. Now break out of the range. If that's what we're gonna do. It's asking me like where would I well, how could I break the range? Well, number one, we need to get below these candles here. First of all, this is the first range we need to get low, and then we need to get below this down here. So you're heading the wrong direction. I know. But I know what you're trying to do. I know what you want to do. I know what you don't want to do. I know what you want to do. But let's you know perhaps what perhaps the thing another thing that I need to be careful of while we're looking at price is assuming that price is going to give us or have that same sort of expansion possibility as last week with that with the news with the fresh news, right? So once markets begin to price these things in, excuse me, I'm assuming that it's a part of the DNA at that point. Excuse me, and then we don't have to really be concerned or overly concerned with too much uh, volatility, right? The volatility has entered the market. Volatility has become part of the norm. And as volatility being a part of the norm, can you still call it volatile if it's stable, right? If it's stable volatility. And I think that that's what we're really looking for. We're not necessarily just not looking for movement in price as much as we want to see stability in the price action. Well, it's going back and forth in this range. Well, how long has it been doing that? Well, it's been doing that for 2 weeks. Then most traders begin to normalize. It begins to normalize, like, oh, okay, well, this is our new norm, right? It's almost as if the seasons change. The temperatures outside go from the low 40s to the high 80s. Well, at first, it seems volatile, right? You step outside and say, oh, crap, it's warm. But when it's 80 degrees every day, or in the 80s every day, it begins to normalize. And it is now you're looking to say, oh, when it's 50, now it's cold, right? It's above 40. And when it was 40 on a regular basis and it dropped down to the 20s and the 30s, then you're saying, oh, wow, it's gotten colder. And then when it rose to the 70s, you're saying, oh, it's nice. It's much warmer outside. So it's all the way that you're looking that you would like look at it. Um I still have my eye on price out of the corner of my eye. I'm looking at the hourly chart now that we have broken below this level. We haven't closed below the prior down close candle, and we won't be able to see that for the next 40 minutes. But I would really like to see us get below the prior low of that down close candle. That down close candle to the right on the hourly chart. It's so long that it is above prior up close candle here and below it here. So now I'm looking for us to get into this range. When this candle closes below this run of candles, then now we see that we took out the high, and then we turned over, and then we moved a little bit lower. But I'm assuming that we're looking to get down here now into this range to get into this imbalance at least to start. Um, we've been in this range before where we put on a micro, and the micro gives us, this type of price action. We've displaced away from it to this degree. I mean, how many handles is this? I mean, how many ticks? I'm saying this as if we really just run somewhere. That's like 300 ticks, right? That's 88 handles. So it's not bad. What we're looking at is not bad. It's just that we are concerned about getting below these prior levels and continuing lower. We were just concerned about getting below those prior levels. Now again, I've moved my stop down into a protected stop based on time and not based on price. Is that proper? I don't really think that it is. My entry was roughly around 11 a.m. and now 20 minutes later, I moved my stop down, and it's probably one of those thought exercises, trading thought exercises as to Well, look where your stop loss is, right? Look where your entry is, look where your stop loss is. It's possible for us to run here and try to test that gap, right? Well, it's possible, but let's see what happens in this new 5 minute candle as we move below this up close candle. We'll move to the opening price of the up close candle on the 5 minute chart. Let's see what we get here. Do we get a gradual trending price, or are we looking at types of volatility that would put us looking at the wrong thing? I should be looking here. They'll put us where we want to be. Again, all wicks down here. This is pure consolidation activity. And have you noticed that there's been no real um aggressive displacement, right? It's all been by the paint by numbers. Oh, okay. Blue goes here, black goes there, right? There's no just running in any particular direction. So I don't like this price action. I think it's exhausting. I've been sitting here we're coming up on 2 hours now, and we're doing very well. But I think that those who really do well in this market can endure this. Those who really do well can endure this. So, Grady, are you saying that you can really endure? I didn't say that. I'm not saying that at all. I'm not saying that I even want to. Oh, boy. Oh, oh. I do want to see this. I do want to see this down close candle go down below. I do want to see us close below this up close candle here on the 5 minute chart. This is really what I'm looking for. And I'm still watching the higher time frame. I just wanted to pull that up for a second. So it's over here on my other chart, and I am watching it out of the corner of my eye. But I wanted to go to something like a 3 minute chart to see if there's any confirmations on the low on these time frames that say, hey, look, yes, we are progressing, we are on these time frames respecting, we are rejecting, we are displacing, we are creating gaps, we are moving lower. So yeah. So yeah. And the time of day, I don't, if we come back again here, honestly, I. That's the only thing I can say. If we begin to rise again and come back into this range, ay. A consolidation that starts on Friday and continues all the way through Monday. What is happening, right? What is it? Everybody's like saying, "Look, I am sick and tired of going from equities to bonds. I'm tired of moving money. I'm just gonna sit tight and see what happens." Hmm. And interesting note about consolidation, just for all of my LS3 fans who think, because some people think this LS3 is ridiculous. Like that's ridiculous. How could it? But today's LS3 range incorporated it didn't really move, and we noticed that on Friday, and we noticed it again today. So on Friday we had this new chart form. Today, Friday, Monday, Friday. Well, what I don't wait, what am I saying? What am I saying? Right. Okay, I get it now. Yes. So last Thursday we formed this level, right? We formed this level. So the LS3 was here. High here, low here, the mid-range LS of the three London sessions was here. We moved it forward to Friday, and then this level, the median LS London session, the one that was near the middle, is here, and then the range did not change. We bring it forward, and the range did change, and I misinterpreted that, and I'm glad to see that I did misinterpret this. because this should be here. Boom. These three ranges. Very narrow, tight range. Perfect. And then on this level, we'll go ahead and lock this in. If you watch the chart right here, this is what we're dealing with. We'll move it down to the 5 minute chart. So you can see prices dropping down through the ranges. Excuse me. But I can't actually do that. I'll have to do it like this. So I can bring this level over. I'll do that over here instead of over here. We'll move down just a little bit lower and it looks pretty good. It's still early in the day. We want this hourly candle to close before we start to evaluate where we should or if we should exit. I'm looking for a range of displacement that's going to put us near, near. Okay, so near her to where we closed on Friday, nearer to the Friday's close. And that's roughly somewhere around nearer to 18,803. The prices are just moving down just casually, gradually. I'm marking this level in my mind, 19,000. 19,000 seems to be where I'm going to move my stop loss to if we go ahead and begin to slip and slide, because I believe $250 is a good stop, right? For me, for me. Now, if you're used to bringing in 30 grand a trade, then you may or may not want your stop. Well, no, that wouldn't be possible. If you bring in 30 grand a trade, obviously you would have either more contracts on or you'd have multiple minis on. So yeah, it wouldn't really be possible. This would be $250 for you at where we are right now. Okay, this is starting to open up and look very lovely. This looks nice. I like, I like, I like. Oh, y'all want to make me work for my money? You want me to work for my money? Well, I am. If you guys get involved in these markets, if you get involved with these markets, you might have a little bit of imposter syndrome at first, but when you go through it all, and then you begin to have some success, and I didn't say you got rich. I'm saying you begin to have some success, you will know that you earned your money. You will know that you earned it. Because if someone opened a restaurant and they are not sure whether or not that restaurant is going to be successful, that's the feeling that you have when you go into these markets and you're trying to you don't have any frame of reference for your own personal success at doing something like this. So the idea would be by the time you go through all of the ups and downs of it, you don't feel robbed, right? You don't feel robbed of the effort to get it done. And the strange thing about this career is it's something for most of us, it's a degree. For most of us, it's a degree. Well, how many years did you spend in school? Right? Everybody's like, oh, 4 years, oh, 6 years, oh, 8 years. People like, hell, how long did it take you to become profitable? They will tell you the same numbers. Oh, 4 years, oh, 6 years, oh, 8 years, oh, 10 years. And then I became profitable. This verticality is really encouraging. I like that. I like that. I like that a lot. I like that a lot. Um, mm, um, mm, mm, mm. Hey, that greed though, that FOMO, that greed is kicking. It's kicking in. It's kicking in. It's saying, hey, Grady, why don't you have 5 contracts on right now? That's $1,700 if you have 5 contracts on. Slow and steady. Watch this. Watch this. Watch this. Watch what I do here. Watch what I do now. I'm going to take a slight breath. I'm going to look where we are in this range, and then I'm going to do nothing. But Grady, price is about to turn around on you and come running right back. It looks like, doesn't it? Do I want $300 right here? Do I want to take the $300? Yeah, it's hard to say. It's hard to say. What I think I'm going to do is I think I'm going to take a break. Did you know that if you work, if $300 a day is how many dollars an hour? Let's see, if you have $8, if you make $8, right? And then you multiply that times no. If you have 8 hours and you multiply and you have $300, 300, you divide it by eight. You divide by eight, right? Okay. What can we acknowledge and what can we see right here? That's very interesting and very important for us to think about before price makes this movement back to the upside. What can we think about? What can we consider before we allow price to come and stop us out? Right? What is it that we're thinking of? What is it that we hope, believe, see, know, think, what? Hey, I'm just gonna be calm. Actually, what I need to do is I need to take a break. I need to go to the restroom and do a couple of other things. And I just need to let the trade go on without me while we're sitting here in profit. And I need to let the price do what it's going to do, and I do not need to disturb it. And that's kind of one of those things where I need to let price do what it's going to do, and I don't need to disturb it. If we're Grady, what if it takes this low out in this gap from earlier and then sends price higher? I'm okay with that. I'm okay. I'm okay with that. Weirdly enough, on my quote unquote track record, it would look like a small win, right? Small win, small win, small win, small win. But the days when price really delivers, and it does so in this way, then it would look like something else. I'm looking for the reversal of this type of move up to this place as we drop down, trade up, and then come back in. And so for price to really with high resistance get back down through this range and below a 17,932. That's what I think. If it were a lower time frame, any lower time frame, our expectation for price would not be uh bounce up, consolidate over the highs, and then skyrocket. We would have we would take out this low at the very minimum, right? To trade this gap between this low and this high, who would drop back into that range at least, then make a concerted effort to begin to move back to the upside, just to make sure that price was completely accounted for and balanced. In my humble opinion, But let me go use the restroom, take a break, and let go look at other things. I have a stop loss in place. I don't. It's not like I want to have an unmanaged trade where I'm not looking or I'm not paying attention. It's just that if I wanted to give this 100% of my attention, I've made a decent entry. I've put in a responsible stop loss, and there literally is nothing else for me to do except not to um I'm thinking of an analogy of the right word phrase for uh cutting your trade short. I don't want to cut my winner short, right? Right? We've watched price drop in, rise, drop lower in the first 2 hours of the day. If we're going to begin to displace and move lower, right? If price is going to deliver and spool, although albeit extremely slowly, let it do that, right? Don't change, don't address, don't adjust, don't do anything. I really need to put this on the screen like this. Don't do anything, just let it do what it's going to do. I wish I had some music to play for you guys in the background. It's just that I don't trust a lot of these streaming services to provide us with high quality music that would not give us a copyright infringement, right? I have desktop audio and I have mic audio. Then I have my G track. I mean, I'm sure I could find another audio source that we could pipe in so we could have something to listen to. It's just that I need a good source that's not going to be problematic. We want to see us close below this up close candle. I'm going to go take a break and then we'll be right back. We have a good little stop loss in place. We want to see it, we want to see it hold. But with the higher time frame reaction and imbalance, we also would like to see us get down very close to what was that level? 18,795. Yeah, like 18,795. Um, buy limit. There we go. Let's try something real fast, just to give us a reasonable expectation for what price might do. This does not look correct. Price entry. We're below that 50% level at this range. What am I thinking? I'm thinking that this line will close outside of that gap, making it a questionable fair value gap on the 5 minute. Questionable, right? Here's one standard deviation. There's a standard deviation and a half from the delivery of this imbalance. I'm going to go take a break. This is that $295 range that I was looking at. I'm going to move my stop to just above this level to lock in just a little bit more profit and to protect myself from a news announcement where somebody might hop online and just say something. Excuse me. A news announcement where someone might give a speech and I'm just not aware of it. So let's I got a stop loss in place, a take profit in place. If we hit that take profit, that's gonna be my day. I'm not gonna trade anything else today. I'll come back tomorrow when I'm fresh. It was Monday, right? We wanted to start Monday solid. We want to come in solidly, and did not want to do anything crazy. We did not want to do anything crazy. Um, and looking at the chart, and I'm looking at the prior down close candle on the daily chart. I'm not sure we could run to the closing price of that, which is 18,486. So 18,486 would be down here. It would be down here, 18,486, 18,486 here. That's the extended end of this trading range, right? So having us hit three standard deviations or 3.4 standard deviations off of this level is not impossible. I want to give me two. I want to give us between 1.5 and two. But once we get to one, I really probably shouldn't expect much more than that. We are inside of this gap. right? The true gap below this level and that level. And that's where we are now. And I know I'm saying, hey, buddy, you did not go run to the restroom, but I need to do that, and I will do that. And I just need you guys to just sit tight, chill, watch this price action pump real quick, and I will be right back. All right. It seems that price is really coming in very nicely. And I think I want to adjust my stop loss, because once we past this one standard deviation, and we're right here between 1 and 1.5, it's been my personal experience that that's where price decides where it really kind of wants to turn around and go back the other way. Let's drop down to the 1 minute time frame and see if there are any CD arrays that could probably protect us from price returning higher, and we could put our a decent sort of a stop loss. We're sitting at 592, and honestly, on the day, I think I want to take this. Why? Because I'm looking at uh 1200 ticks right there. That's 300 handles. That's a good trade, right? And even if I'm not greedy, I don't really want to get greedy by this type of this particular type of a trade. Which means what? So we went into drawdown with our first one or two trades that we had using minis, right? We switched to micros. And the reason we switched over to micros is because we wanted to work on our drawdown until we could get back into a position to trade a little bit better, right? We've been consistent and we've been putting money back, equity back into our account. So we've been doing pretty well. Now, what could I do to ruin that? What I could do is I could cut this trade short, right? Because holding trades is the hardest part sometimes. It's harder than making money. Because I'm looking at this trade and I'm saying to myself, wow, like what it could turn around on me any second now, right? It could just go back up, it could trend for the rest of the day, is the truth. We've just come into on the daily chart. We'll move this. That's five. That's one day. On the daily chart, we've just come back into the closing price for Friday. That's Friday's closing price. This is where I said I wanted to exit. And I am going to because this was my target. This is where I wanted to see us get to. I have my stop loss. I had it here. I moved it just a little bit lower, thinking maybe we could run just past it just a little bit. Then I said, well, is it possible that we could come down here to the opening price or the closing price from Thursday, right? That crossed my mind. Um, the only thing that I think that I should do is I should move my stop loss here. I should leave my stop loss alone, and I should really consider the benefit of trading my trading plan and not allowing greed to take over. What is the benefit? 620, 622. Should I wait for it to hit my stop loss, or should I do anything else about it, right? Should I let it hit my stop loss or no? Stop loss or no? Stop loss or no? That's the question. Stop loss or no? 1 minute and 38 seconds left in this 5 minute candle. We've been trading for 2 hours for 24 minutes. Man, what am I thinking? The thought is, we open here on Monday, we drop down in, we drop to the low of the gap that we just traded, that we had between Friday's close and today's open. That's the first thought. There's a down close candle on the 2 hour chart. There's a 2 hour down close candle sitting right here. But in 5 minutes, either we're going to be above that candle or we're going to be below that candle because now we're coming directly to the middle of, we're coming to the end of the hour. We're in the macro. Ooh, either we're going to run lower or we're going to run higher. Do I want to find out by seeing us up here at the end of an hour? Or would I like to take what I have, pocket it, and come back tomorrow and start fresh? we're inside of a gap coming into the last 5 minutes of an hour of the hour. And the question is will this 5 minute candle go up or down? And which would I rather see? I'd rather see it go down and hit my stop loss before the hour closes out. Because I would like to see us get down below this hourly down close candle. But I think what I'm asking for is outrageous, right? I think what I'm asking for is outrageous. I think what I'm asking for is I want to see price start falling. I want to see us run higher time frame down close candles on the hourly chart. And I don't want to see any reaction or response from those candles. I just want to see us just break down and break through it. And then by the time the new hour opens on the 1 hour chart, by the time that new hour opens, I want to see us down here, like down here in this range. And I want to see us run down below this zone. Okay. So now this is going to be a key patience factor. That's going to be a key patience factor, keeping that hour in mind, saying, oh, okay, well, we're going to turn over here at the hour and move to the upside. We drop down, we hit the down close candle, we close the gap, we traded the range, continue higher, or we close the gap, traded the range, literally bounce high enough to take me out of the trade, and then continue lower. Okay, so it looks like I've left about $100 on the table. And where would I put my stop loss to keep me in this trade and not to choke it and to let it literally trade on the higher time frame? Because this is not like just saying, "Oh, look, I want to go for the I'm saying, look, I'm looking at the range of the day, and if today is a bearish day and it's a long range or a wide range bearish day, let's see what it's made of." But prices on the 1 minute, it is very bullish, right? It is running to the upside coming into the close of this hour in the next 2 minutes. So that's scary too. More or less profit, more or less profit, more or less profit, more or less, more or less. Okay, the only thing I can do is sit tight, hold on and see. Sit tight, hold on and see. Hmm. Bird in the hand, right? Let's take this. This is close to the level that we wanted to see. It's not very strong price action in this range to say that we're really going to be bullish right here. 16 seconds left in this 5 minute candle. Oh, that's one. Sorry. This is what the 5 minute candle looks like. There's 1 minute left in it. I wanna hold on to this trade and let it run. Let it do what it's going to do. Because again, I do not want to cut a trade short that has much more life in it if I have such a good position and there's nothing else for me to do except to enjoy the run to the downside. Like on this 5 minute candle, I literally can put my stop loss at the high of this down close candle here. That makes much more sense than where it was. That's a 5 minute candle. We've turned over, we've dropped in. We're looking at 568, and I am reeling inside, attempting not to um, just push any and every button I could possibly see. I'm reeling inside. Just not to just start pressing buttons. I want to see the whole range in this window right here as to where we are between our stop loss and where we are. Here we are opening the new hour. And the only thing I'm looking for is to get to this level, to get right here to that zone, to take that area out. Just a nice little push down to mean threshold of that down close candle. And that should get us exactly where we want to be. We're at $600, 599. I am choking this trade. I am on the 5 minute chart. That is a long down close wick here. So this is the high of the down close candle on the 5 minute chart, not just on the one. So I've kind of choked that trade, and I've done so much to it. I know now that in the next second or two, I'm going to exit. I am exiting this trade at 547, 552. It's difficult. It's difficult. New hour just opened, and we opened right off of this down close candle on the hourly chart. And man, I didn't want to see a large wick on the top of this candle. I just wanted to see us kind of do this, respect these levels on the 5 minute, and then go down. But this 5 minute chart is doing this. Let's take a look on the 3 minute chart. Let's see what it looks like. The high 3 minute candle is right there. Do 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 do. Come on, go ahead, go down. It's not a bad day. It's not a bad day. Again, if these were hourly rates, if these were hourly rates, $600 or $500 is I don't somebody help me do the math. $500 if you work a 10-hour day is roughly $50 an hour, something like that. And I have to put that in perspective because, my brain is it's I got trader brain, right? Trader brain, you're looking at other people trade and they're like, oh yeah, I made 12 grand this morning, right? And you're like saying to yourself, dang, I made $500. Trader brain, right? So it's the massive distortion about what you're actually looking at. You're like saying to yourself, oh wow, that's the best. That would have been this trade today would be like working the best job I've ever worked in my life. The highest paying job, not best. Highest paying job I've ever worked in my life. All right. The way we just kind of dropped over right here, we want to see a slide down. Just keep on going. Just keep on going. Just keep on going. Keep on going. Keep on going. Keep on going. Because now I'm gonna start pulling my stop loss down. I'm gonna start pulling the stop loss down more and more and more. I have no idea where we are in as far as price is concerned. It's just that I want to see it go down and hit my stop loss and not up to hit my down hit my TP instead of up to hit my stop loss, right? New hours just formed. And there's not much distance to go. Few more ticks. We're not in jeopardy. There's no pressure. There's no rush. We win either way. We win either way. Okay. We win either way. I just would like to see this candle, even if if it's a bullish candle, I would like to see a bit larger tail where we would take out the low of the prior down close candle and run down to mean threshold. Come on in. 10 minutes left in this 15-minute candle. Still seems a little bit aggressive. Yeah, it looks like I might hit our stop loss here. That's not cool. No loss though. All right, I'm cutting it. Cutting at 512, 515. Keeps, you're not gonna keep. New 5 minute candle just opened, and this one should be the one that should make us happy, but it's not. But it's not. This should have been the one that made us happy on the 5 minute candle. We should have saw this 5 minute candle open, and then we should see us start to deliver down the body of this prior up close 5 minute candle. And that would be exactly what I would want to see at this point. Come on, deliver down the body, 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 down the body of this prior up close 5 minute candle. Down the body, down the body of the prior up close 5 minute candle. Yes, down the body of the prior up close 5 minute candle. That's an area that I'm not yeah, that I'm looking for. That's good. You yeah, down the body. That's great. Down the body. Keep going. Down the body. Once we get past this point, I'm gonna move my stop loss to this particular point. Well, Grady, why don't you take it now instead of like waiting till why are you deferring it to later? You could take it now instead of taking it later. Don't look. Don't trade my account, please. But I'd like to see us go down the body and past this down close candle on the 5 minute chart. But we have 3 minutes left in this 5 minute candle. And I would love to see us get down this candle. And if we can't, that's going to be a problem. That's going to be a problem. We're looking at 555. I saw that number 555 multiple times, like 555, 555, 50. And once I saw that number, like the first time, it grabbed my attention. I was like, oh, wow, look at those fives. And so now I'm saying to myself, my psychology has been involved, right? I saw these numbers, the psychology just got involved. Am I still thinking or am I moved over into um the metaphysical, right? Am I still trading or am I looking to the metaphysical? Well, I'll tell you what, this traded off the right off the middle of the body of this down close candle. And I don't want to look at that. I'm gonna take $500. I am going to I keep saying what I'm gonna do. Let me see price. Back down that up close candle. Let's go. Let's go. Come on. Come on. Come on, don't play. If you go, yay, hey, let's go. Come on, let's go. Let's go. Come on. Oh, you have to close of that candle, huh? You have to close of that candle. Okay. Okay. Yes. Yes. Keep going. Keep going. Oh, come down. Come on down. You've gone down the close of that body. Yes. Okay. Good. Good. I've adjusted my stop loss down just a little bit. I'm giving myself just a little bit more money for the wait. I waited all of this time. I'm giving myself just a little bit more money for the wait by pulling my stop loss down now by waiting till this point. Just a little bit of a reward, right? It's going to stop me out, but it's going to stop me out with one or two more dollars because I waited this long. Now we're down here at this down close candle on the 1 minute chart. We have 7 seconds left in it. We have 1 minute left in the 5 minute candle. And now we're coming back past this level, 554, 562, 57, 578, 583, 584, 59. Keep going, baby. Come on. First 10 minute candle of the hour has just transpired, and we are here. 37 seconds left in this 5 minute candle. This is gonna tell the whole story. This is gonna be the whole story right here. 29 seconds, the 5 minute candle decided to extend itself out just a little bit more. We're looking for this candle to close. Nothing is locked in until this candle ends. Nothing is locked in until this candle ends. So we're gonna sit here, we're gonna sit here and wait. We're gonna sit here, we're gonna sit here and wait. Nothing is locked in. 7, 3, 1. Nothing is locked in until now that candle is closed. We have a stop loss in place. We're looking at the high of this prior up close candle as a legitimate area that price might want to retrade to before it moves lower. Or price could just pop up just a little bit and then continue lower. It'll do what it does. It'll do what it does. Now, what we would like to see is price. If we wanted to come back to this up close, to the close of this candle, of this up close candle, we would like to see it do so after it hits our stop loss. After it hits our stop loss. So it doesn't. It closes just below the close of this prior down close candle on the 5-minute chart. Then it pops up again. On the 1 minute, now we see that it has this very odd. This is what it looks like on the 1 minute. That looks odd, right? Perfect. Keep going. That's perfect. We are matching the prior low. We're at the prior low. We're matching the prior low. Okay. 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 Now that is what I wanted to see. I'm gonna bring it right down here to the prior to the prior low. I don't want to see it turn around just yet. Bringing our stop loss right down here. We came up to this level, retested, we moved lower. Now we're coming into the stop loss. 700, 699, 704, 718, 722. We're doing good. We are near. We are close. We are, we are, come on, block it in, baby. Book it, book it, book it. Come on, come on. If you turn around on me right now, I'm going to laugh. Woo! Get it. No! No! Oh, wow. Oh, no. Look at that. Oh, man. Come on. Look at it. All right. Okay. That's crazy. I'm out. I can't take no more. Take no more. You gonna do me like that? I'm out. And that's still gonna be it for the day. Can't believe you. I can't believe it to the tick. To the tick, and it's probably gonna go down further, but man, that's great. This is Traded Entertainment. Oh man, thank you guys for hanging out with me today. I appreciate it. Everything that all when I mean who I don't think anybody hung out with me, but uh that's Trading Entertainment. Oh, I love it. I love it. I love it. I love it. Hey guys, if you want to get into market, remember that this is risky. It's risky. This is Trading Entertainment. This is Grady on the chart. Risk disclosure. Um, hey, come hang out with us again tomorrow. Hopefully, it'll be as exciting as it was today, or more so. I mean, because it really got really tense there at the very end. But come hang out with us again tomorrow. Grady's gonna be on the chart Tuesday. And take care of yourselves, everybody. Bye bye.